Yo. Oh, we're live, baby. We are live. Get this thing up real quick. Then we shall get down to business. Hit y'all with a little ad. Okay. Julie Miller, what's going on? How are we doing? God the Heavenly Father, okay. We're showing up. How are we doing? How are we doing today? What is going on? Ramses, get your moon boots ready. Y'all are such cap. Just admit the squeeze isn't going to happen. I think you're mad for some reason. We could talk about it. I'm like kind of like an unlicensed therapist, if you will. Take any big losses or something? Chris with the Win Lambo. There we go. Hopefully here shortly. It looks like AMC has a little breathing room to kind of do what it's going to do. Looks, beautiful. Look at that. Do you think we will have another dip, or should we load the boat now? Well, not financial advice, but I don't think you're going back to 13 to 15. Just considering the price action we've seen, the institutional order flows that are coming in, as well as this probe. Obviously, I'm sure you know, into the banks as well as the liquidity providers. So I think a lot of that manipulation that was happening is mostly ended. And I think that's why, no matter how red the market is, no matter what's going on, AMC tends to do its own thing. It tends to, like today, go up 1%. It was up more than that. You've seen a lot of fear, instability, all that. But, I do think it will come down when the markets come down. And like the title of this video says, I think it's going to get bloody here. The Fed's kicking the can down the road. Like, just kicking it and kicking it and kicking it. And eventually, like they say in Wolf of Wall Street, the chickens will come home to roost. And, not dealing with what they need to deal with now does set us up for some pain here in the next probably 3 to 6 months. But, for a shorter term trade, I would personally load the boat right here. But, for the MOAS in general, you're good. Will it come down? Probably. When the markets come down in a substantial way, I'm sure it'll come down as well. But I think we're good for the next couple of weeks until that Fed meeting, which is exactly 3 days or 3 weeks, 6 days, 21 hours, and 54 minutes away. So there's definitely some time for AMC to continue on its rally. Please talk about it. I'm not FUD. I've been here since January and I'm getting doubtful. Please guide me. I don't exactly know when it's going to happen, but what I can say in the past week or two since AMC has started to rally, I noticed this before this probe went out, but I started to notice that the institutional order flows every day started to turn really bullish. Really, really bullish. And we noticed the price of the stock was kind of doing its own thing. Oddly enough, if the markets were down, 2%, AMC might be down like 1%, or it might even be positive on the day. It started to do its own thing, and it started to go up. Now, when that probe came out, it started to make sense because they're probing the liquidity providers because of the block trading. And the only liquidity providers that service the NASDAQ are Citadel Securities, Goldman Sachs and Company, and Virtue Americas LLC. These guys are for individual stocks, and they trade for themselves and provide liquidity for themselves. So they don't touch AMC. These guys, they don't touch AMC. These three, they do. So when this probe came out just a couple of days ago, it starts to make more sense, and you start to put the dots together, because like I said, I've been watching institutional order flows for the last 3 months, and they were just so bad that there was nothing to really report. It would be like 0% to 10% positive on any given day. Even if the stock went up 10%, the institutional order flows were really, really bad. So it seems like now you're getting more of a free market with AMC. You're kind of seeing, my personal opinion, more of our buys going through. You're not really seeing all of that, routing here, routing there, letting these orders out, not letting these out, that kind of stuff going on. So I think in that aspect, we have a clear shot here to see what AMC can do. As far as the grand picture, the looking at the total, outlook of AMC, you have to, let me articulate this the right way. AMC is not going to squeeze for no reason. It's not going to squeeze because of a catalyst before when AMC was being manipulated. There was no way. We've seen huge catalysts that did nothing for the stock. Now you're seeing very small and minor catalysts that are letting AMC do its own thing. Like, there has not been a big announcement. There hasn't been anything really that would justify AMC going against the markets. AMC was up like 3% of the majority of the day when the S&P was almost down 1%. NASDAQ was down well over 1% at certain points. So, adding that with the shorts being forced to cover when the markets draw back, that's really the key to all of this. Is when the markets come down, that's when you can see the most when a catalyst happens. Because if you're a hedge fund, why are you going to cover on a stock if you're down on your short position when stocks go up and they come straight back down? Why would you do that, right? If you don't have enough money, if you're physically forced to get out of your position, they come in, forcefully liquidate you, that's when you see shorts cover, right? So, as far as that is concerned, that's why I'm so bullish right now, is because we know the markets are going to come down. The Fed is kicking the can down the road. They don't even care anymore. They were freaking out, sounded, cautious at 3-4% inflation. Now it's 7.5% and going to continue to go up. And it's like they don't even care. I've lost a lot of respect for the Fed because they simply don't care. They still think that inflation is transitory. Even though they're saying that they're retiring that word, they're acting as if inflation will go down on its own, which it's not going to. It's not going to. The first down read in inflation will likely be end of summer, maybe, right? So the markets are going to come down. It's all going to catch up. And it's not going to be a flash crash. It's not going to be, oh shit, shorts just lost all this money. Hedge funds are in the toilets because they're shorting meme stocks and they're not protecting their portfolio. They're not shorting stocks that will protect themselves. And the markets are going to be down for a long time. When the Fed goes through tightening cycles, when inflation is high, when the economy starts to slow down like it will end of this year, probably around September-ish, maybe even, November, or possibly 2023. It's really hard to pinpoint, but end of summer, fall time, that's probably when I would expect to see the bottom in the markets. So with that being said, you're going to have plenty of time where the markets are down and hedge funds are down to see a catalyst, to see that forced liquidation process start to happen. Hopefully that made some sense. Pretty long answer to that question, but that's why I'm so bullish. And then now, I was this bullish before, just based off of the markets coming down and how this is going to play out. Like, we're nowhere near a bottom right now. We're nowhere near a bottom. So, if you're invested for the long term, fine. And I'm talking about the broad markets here. So if you're invested for the long term like I am, cool, buy the dip. If you're somebody that wants to try to time the markets, which historically is not a good idea, then I think you're good waiting. And that's the key to this whole thing. We have not seen the markets come down during this whole squeeze movement. During this whole last year, the markets have been doing nothing but going straight up. and you really need to see a decent pullback, which happens after the Fed starts to tighten. It happens when inflation is high or high or coming down. And it happens when the economy is slowing down, when the Fed has to U-turn. But you could see the MOAS during that whole period because liquidity is low. And by the time they start to raise rates, the markets have already priced in one rate hike so far. And I say that because the 10-year Treasury yield is now 2.031%, where it used to be, give or take, 1.75%. So it's already priced in pretty much that 0.25% rate hike already. And if you want to get dramatic with it, back, December, it's already priced in 2 rate hikes. Oh yeah. Luck on the Irish hat, but it works for all. Yeah. That's the hope. Is this hat? Was there an exploit? Yeah. It's good luck. And we're heading into, March, so, it only makes sense. I think. Ooh, Vlog in the building. Good evening, my fellow lucky leprechauns. Oh, let's go. I hope we get a little lucky. Super show. Yo. TCA here. I think the Fed wants inflation to get worse so they look like the hero when they raise rates. They are so behind the curve. Oh my God. I've lost so much respect for them. The Fed was the reason why the stock market just continued to go up. Now when it's time to get things right and do things the proper way, they're dragging their feet. Like, the markets can't handle it. Like, dude, I would rather feel the pain now. And by doing that, obviously, we would essentially have the MOAS any time from now if they started to actually do what they need to do. Instead, they want to wait, kick the can down the road. And if inflation continues to get worse, then it's a lot harder to get inflation down. Like, look at the chart. Hold on. Let me do this. Let me do it like this. Like, this chart is scary. The last thing I want to happen is this. Let me pull it up for you. The last thing I want is this. Because, you will kill the economy. Like that new job you just got, you're probably getting fired if this happens. Check it out. And that's what I don't want to see. So the red line is inflation. The blue line is the federal funds rate. What do you notice about this whole chart? What do you notice about this? The federal funds rate has to go higher than inflation to get inflation down. Historically. The blue line, always above the red line. If there's high inflation or pretty much high inflation that lasts, the federal funds rate has to go above that. Like even back here from 2002 until, 2008, the federal funds rate went from 1% to 5.25%. And then you got the recession, the global financial crisis, and then inflation went straight down into deflation almost immediately. So even as far back as 2008, you have to see the federal funds rate higher than inflation. If inflation is 7.5% and it goes to 10%, the federal funds rate is going to have to go way crazy. Good luck getting a car loan, a house loan, a credit card. Good luck getting anything. Good luck doing any kind of business in the economy if the federal funds rate goes to 10%. or even over 5%. That's kind of insane. That's what really is concerning. And that's why the Fed needs to act now instead of kicking the can down the road. But I'll take it however they want to give it out. I mean, any thoughts on Roblox, my new bag? I've never been a huge fan of Roblox, to be honest with you. I've just never liked it because they have not made a lot of money, comparatively to the market cap in their history of Roblox. And I mean, I think it's so concentrated, right? It's simply the game and whatever like toys they sell in the in stores like Roblox toys or whatever. But it and I know there is kind of like an ecosystem in Roblox. I just I'm not a fan of it. I'm not a fan of the valuation. You're basically betting on like a metaverse play. And I think it's a little too early for metaverse. I think right now like metaverse talk, or even NFTs really for that matter, is like crypto in 2015 to 2017. It was for 4 years until crypto actually became mainstream and everyday people knew about it. So I kind of think that's like the metaverse. If you have 4 or 5 years to see that side of the business play out, could be really good. But I've never been a big fan of it, to be honest. I think it could be good though, but I mean, I don't think you're getting any real like intrinsic value from it. But could be good. I mean, I didn't like it at 60 and it went to 120, so it definitely could go back there. I just got a new job. You just got a new job? Congratulations. Bigum says September. What? Kenny Boy pays them too. Yeah, pretty much. 12 shares away from 200. Let's go. Oh, yeah, let's go. 200. Hey, that's a good level. Get rid of debt on credit cards before these rates go up. Yeah, that's what I was telling my former boss, because he's like, what should I do? He had no idea the Fed was going to raise rates and do all this. Which I'm getting skeptical even if they're going to do that at this point. I mean, they're still buying bonds. Like right now, they're still buying millions of dollars in bonds by the time we're done with this live stream. So, I mean, who fucking knows when it comes to the Fed anymore? I have no idea. So, but he didn't even know. You know, he was like, what should I do? I'm like, definitely pay off those variable lines of credit. That's for sure. What's the bad news? You actually do have some Russia bad news. Which, again, I think the whole thing is bullshit. And I'm willing to take bets on it. I don't think Russia has any plans on invading Ukraine. But it says Russia adds 7,000 troops to Ukraine border despite claims it would withdraw some forces, U.S. says. That was 2 hours ago. Markets, they really did not even react from it. But, yeah, troops have joined the 150,000 already near the border in recent days. And for a lot of reasons, they're not gonna invade. Like, don't listen to me. I'm not a financial advisor. Don't base your trades off of what I say. But Russia is not gonna invade Ukraine. I'm probably gonna close out my oil trade tomorrow. But I guess that could be bad news, though. When most happens, will it just show at the high price without even seeing it climb up at all? No, I think it'll climb up. I think it'll kind of be like what we're seeing now. It's not going to be like one day it's 20 and then one day it's 10,000. You know, I think there will be that climbing. You'll kind of see it chill out at certain prices, maybe even like GameStop. Like, and who knows how high that would have went without the buy button being disabled, but maybe it'll chill out at like 300, take a breather, and then continue to go higher. At the same time, though, you might just see that domino effect go straight up to the top, depending if the markets actually do fall a lot. And that's when the MOAS happens. Like Volkswagen, like people were forcefully liquidated. Like there was nothing to do about that. The markets were down. Nobody had any money left. So, they were forcefully closed out of. Just depending on when it actually happens, where the markets are, I think that's going to be the biggest thing. If the markets are down in the toilets, and you say the SPY is like way down here-ish, 2020 levels, or even a little bit higher, like 350, 360. Like if the SPY is right here, this peak that we've seen in September 2nd, actually, 2020, if they're like down here, then you'll probably see that domino effect all the way up. You're going to see a lot of halts, things like that. Like the stock will get halted a lot, but I think you'll definitely see it climbing up. Russia lying about pullback, might see some red tomorrow. Yeah, I just don't buy it. Like, give me your guys' thoughts on it, because I don't buy it. For so many reasons, it does not make sense at this point. So many reasons. Hard to break the resistance without better volume. Yeah, I think it's good, though, that we are going up on low volume. But when that volume comes in, yeah, that's when you're going to see shit get crazy. Guys got to remember, in the 70s and 80s, it was over 12%. And the way this administration has taken to give free money, we are going to have to pay for it. Yeah, I mean, they should have done the initial stimulus checks. Where they messed up is the unemployment insurance. That's what is causing a lot of this inflation, as well as, the Fed. They should have raised rates a year ago, but inflation is bad for regular people. But if you own like real estate, if you own your own home, if you even own stocks, inflation is actually not a bad thing. You would rather have inflation than deflation, believe that or not. Who knows when Russia decides on Ukraine? They're way too busy hacking systems, and yeah, hackers are on overtime. There's some clarity on the Ukraine. There's going to be a lot of choppy trade. Yeah. Russia does not do things with the whole world knowing what they're going to do, when they're going to do them. They economically can't afford to, right? And there's not a strong motive to do anything. Like, what does Russia really gain from taking Ukraine? Ukraine's already the poorest country in Europe. Like, what do you gain from taking Ukraine? And Russia's also a very poor country as well. So don't get me wrong. Russia is not, it's not a powerhouse like a lot of people think it is. It has a very low GDP. It's not in great shape. So it's like, what do you gain from that? At the same time, Ukraine's not a pushover. It's not. If they decide to fight and they hunker down and they fight, it's gonna get bloody, and there's not enough to gain to do it. Lost money on BAC today, bro. Do you think you'll see better days? My contract expires March 18th. Oh, probably, yeah. Banks should benefit from this. I think I might have Wells Fargo. I'm not exactly sure though. They're older and they're far out the money. But I think it could be good. As long as nothing else happens, the markets will probably go up. But Russia probably going to dominate the headlines. The futures are coming back to life too. But yeah, I think banks could be good. Fucking market makers are scamming out here. Of a few percent point is indeed a good thing if the economy is booming. I think companies are overestimating consumer demand. The result would be inventory surplus and reduced inflation. It's a tough spot for the Fed because they could case recession if they are wrong. Yeah, that's one argument of it. It's with the wage price spiral, and I'm sure you sound educated, so I'm sure this is nothing new to you, but with the wage price spiral, companies they have pricing power, so they start to charge more. That feeds over into people who work for the company have to pay more for products because this is happening on the countrywide scale, really on a global scale, and they demand more. They get paid more. The companies have to charge more, and it keeps going like that. That's why inflation is so tricky, because your real wage growth is negative. So you made more in 2020 than you did in 2021, as long as you were still working, right? If inflation's 7.5% in 2021, and real wage growth is 5%, it's like 5.5% for the year, you lost 2%. Now, if you didn't get a raise in 2021, then you really lost out bad. Then everything just feels that much worse. So even people on like fixed income, that's why it's so tricky, because if you're on fixed income and you just seen everything, food's up like 40%, like some crazy numbers. So CPI is not even really reflective of what's going on in the real economy. But nevertheless, yeah, that is a part of it. I do think consumer demand will slow down. But I don't think a lot of companies are hoarding supplies or inventory in the same way as people think they are. Like, I think companies know that there will be a slowdown in demand. So I don't think they're hoarding like we're all getting more stimulus checks. So I don't think that's really going to be a main driver of deflation to weigh out the damage that has been done. With the wage price spiral, that's really where the problem is. And also, people are about to get the biggest stimulus check they've ever received. I mean, my child's mother just did her taxes, and she has, a couple kids, and she's getting like 13 grand back. So, that's going to fuel a lot of inflation until probably the end of summer, if not the fall, when you start to see that first tick down. But people are really, some people are getting tax returns back around pretty short, like 2 weeks, 3 weeks, I think. So, you're going to see another big round of money get injected back into the economy. But if you own your house or you own rentals, see, I have a couple rentals, so inflation is actually welcoming to me. Like, besides the stock market, obviously that shit's not good. It more so causes fear than anything else. Because historically, when you get high inflation, you always see a recession. Like, where's the chart? Like, every time inflation spikes, you see a recession. Right here, right here, right here, right here, right here, right here, right there, right there, right there. And 2020 was the anomaly here, right? So every time you've seen high inflation, you see a recession. The question is, how bad is inflation going to get? How hawkish does the Fed have to get as well? And nobody wants to have interest rates going that high. But moral of the story, baby mama trauma, yeah, pretty much. Moral of the story, when your $100 last year, is like 10% inflation, right? Then money becomes easier to get your hands on, whereas your loan stays fixed, and it becomes cheaper to pay that off. It becomes easier to get your hands on dollars, and the amount stays fixed. So, at these interest rates, you're really borrowing free money if you include inflation. So if you get a loan for 3% and inflation's 7%, or at least stays above 3%, technically in the long run, that is like free money. Not in the short term, because obviously, things aren't perfect, but in the long term, with high inflation, it's free money. That's why the government is still around. They've had higher inflation, so it's easier to pay down debt without actually having to pay it. But yeah, inflation not so good for the markets. Why isn't Google after hours reporting anything past 3 p.m.? Hey bro, do you guys teach how to make spreads in your private Discord? Yeah, we do all of that. Yeah, pretty much. We're going over, I like to do a lot of debit spreads, and I've been doing butterflies, but just because it's cheaper, but the butterflies take a while to play out. But yeah, we do all of that. Why isn't Google after? Yeah, reporting anything past 3 p.m. Somebody else was saying that too. This one. Wait, are you in California? You said 3 p.m. So that's like what, 6 p.m.? I don't know. I hate this military time. I can't really read it. But I seen somebody saying that, and Google actually seen a big move down in after hours for a brief minute right here. I think they're serving warrants to hedge funds, or is all smoke and mirrors? They've probably like sent out subpoenas for their computers, stuff like that. I wouldn't say they're sending out like warrants to arrest people. I wouldn't go out and say that, because that's a big claim, but possible. What is the recent wage growth of the lower end jobs here in Minnesota? Jobs that are paying less than 10 an hour in 2020 are now paying 15 to 18. Different sectors are more so, like the hospitality, like restaurants, hotels, stuff like that, has seen larger increases because they were so low to begin with. And I mean, when you give out a lot of free money, people demand more money because they're used to a certain way of living, which is fine, but it does cause inflation and all that. But yeah, I'm not sure the exact number. I want to say like 7%, something like that, but not exactly sure. Realistic inflation is more like 15, not the government numbers. We all know how everything we use and need is stupid high, just like back in the 1970s. Oh yeah, CPI is a joke. Like, go to the grocery store, and I remember as a kid, if you spent $300 at the grocery store, you were getting a full cart, like all the way up to the top. Now you don't get nothing. And actually remember, it was first over the summer when the price of beef went crazy. I got 2 steaks for like $50. I'm like, what? What is going on? And now it's just ridiculous. Yeah, crashed the market so I could buy Apple at 30. Oh yeah. That would, shoot, I'm buying Apple at 30 too. See, which makes me like, funny you say Apple too, because I think Apple is one of those stocks that will be hit hard in 2022, later on throughout the year. Like, the last thing people do is like buy iPhones when the economy is slowing down and people don't have as much money. And Apple's funny. They don't give guidance and they just roll with it like that. So nobody sells off the stock because they don't see what's going to happen. But it's like me, I'm like you obviously, I guess Wall Street is really retarded, because anybody can see that's a retail investor that, hey, earnings are not going to be as great at some stocks in 2022 than they were in the last 2 years. But especially Apple, that's really your discretionary. Like, you don't have to get a new iPhone every day or every every day, every year. Like, you don't have to do that. You can go years without getting a new phone. And that's the first thing that goes. So, and Apple holds up the whole markets. If Apple would have had bad earnings, the markets would not be where they are right now. Military time is easy to read. Just subtract 2. 20 hours minus 2. Huh. Interesting. Okay. I've just never had to do it, I guess. Do you think AMC is in for a lot more pain? I think tough question. Like, I think we've seen a lot of the pain. I do think we could rally from here heading into even March or April, and then once the markets do finally come down, that's when you could see more pain. But I think we'll go up first and then come down. I don't know how long. Like, I don't know if we'll go to 30, 40, 50 and then come back down to 20. I don't know that much, but I do think in the next couple of months we will see a move back down to like these prices we're at right now. The markets, they're going to take a hit. My area restaurant stores in general have very little amount of people in them. Not looking good. Yeah, same here. And that's the problem. That's the biggest thing. That's why I'm losing so much respect for the Fed. And just what are they doing? Like, they're so out of touch with reality. It's crazy. Because when the markets slow down, when the real economy slows down, and we go into this paper recession, which, I mean, I think it's very likely is going to happen probably the third and fourth quarter of 2022. If not, maybe the second quarter. Second, third quarter, that could be when your paper recession starts. I doubt it in the second, but definitely by the third and the fourth. And when you have high inflation like that, which is very hard to go away, you see growth slowing down and a low interest rate. That is the worst case scenario. That is the last thing you want to see. Because, I mean, the Fed can't stimulate anymore. They can't do anything else. They can't give you money. They can't do anything. Only Congress can give out money. So it's a shit show. You want to have the rates at least up to 3 or 4% before a recession starts. Like, even back in the 2008 days, before 2008, the Fed was able to accommodate the markets because the rates were at 5%. Right? So before the markets need accommodated, pretty much every time the rates have been high. Right? Like, just like we showed, the rates are high, recession comes, that's the gray lines, the federal funds rate goes pretty much straight down every single time. Now, if a recession comes and we're like right here, you can't do anything. That it could be one of the worst recessions we've ever seen. If inflation stays high, I mean, that's the real question of, is it going to stay high or not? But you can't print like 30 to 40% of all dollars in circulation and expect inflation to go away in a couple months. But, I mean, maybe that's just my opinion, but it looks like the worst case scenario is happening right now and the Fed does not realize it. Like, they're out of touch. They don't get it. Everybody is screaming at them like, dude, you guys are way behind the curve. You're way behind. Like, the rates right now, if the rates right now, put that into perspective, if the rates right now were 1 to 2% because the Fed had started raising last year, I would not be concerned. I would not be concerned. Inflation obviously wouldn't be this high, I'm sure. But if the economy slowed down in a substantial way, the Fed could just cut rates back down and stimulate. They're not doing that. But that's the thing, too. That's when the markets rebound, is when the Fed U-turns. Like, Meet Kevin is right. Every time the Fed rebounds, Like you could correlate this with like the markets. Every time the Fed drops the federal funds rate way down, that's when markets start to recover a little bit. Like the official recession, I believe, started in September 2007, I believe. And that's right when the Fed started to, drop rates. The market stayed down for a little while. Then they realized, hey, the whole financial system is not coming to a collapse. Money was so cheap, everybody started to borrow, and the markets started to slowly recover. But, oh man, I don't know what the Fed's doing. I don't know. I don't get it. I hope they're right, though. I hope inflation goes down, and I hope I'm overreacting. I hope I'm wrong, because I like to buy rental properties. That's my thing. I like to buy at least one per year, because I can buy it for 3 to 5% down, very cheap to do. Live in it for a year, move out, buy another one, rent the last one out, over and over and over and over again. So in 20 years, you could have 20 rental properties on top of your stock portfolio. You're set no matter what. Even in 5 or 10 years, if you guys did that, no matter what age you are, if you did that 5 or 10 times and had 5 rental properties, you would be just fine. You would be just fine. So it's like, I don't want the federal funds rate to have to go as high as inflation to get things down. That's going to make all borrowing costs be unobtainable. You're not going to be able to get a house loan. And real estate's not coming down. There's too much demand. There's not enough houses. So it's one of those things, like, I really don't want to see that happen. But I think the markets are coming down either way, and I think we're going to get the MOAS either way. And then I'll just buy the whole city. Ain't that right? I know you guys feel me on that one. Just buy the whole city. Tell me some good news, Tyler. I mean, there is some good news. Like, the Fed minutes were not bad. It wasn't anything people didn't expect. But you have the Russia stuff, not good news. If you're talking about good news for the MOAS, I think the way to look at it is bad news as good news and good news as bad news, because you need to see the markets come down. So I think this is actually good news, what we're going over right now. Believe it or not. I mean, the market's coming down. Like, if you're in other stocks, then not the greatest news, but if you're in AMC, I think it's great news. Well, yeah, you go, Tyler. Cheese chaser. Appreciate you. Yeah, see, now if you're in like Cali and you're dealing with like $500,000, $1 million houses, the real estate thing might be a little bit harder, but it's going to be a lot harder to squeeze again, considering the stock had a lot more hype last time. See, I actually think that's one of the best things about AMC and the last time around is everybody knows the stock and they know the potential there. And even the hedge funds that knew about the block trading scandal, the manipulation, I mean, everybody knows about it, but especially them as well. I think that is going to cause more FOMO to go into the stock, if that makes sense. Once you actually do see that, like anybody that sold AMC took the loss, sold out, even at $13, I'm sure they have already bought back in. If not, when the stock starts to rally again, they will buy back in. It's human psychology. That's why, if people sell a stock and it goes up the next day, they get in. It goes down the next day, they sell it. And then they get back in the next day, it goes up. Like, hoping it's going to go, up $100 one day or something. It's human psychology. So I think the FOMO, all of that will definitely be there. And I think it is there, just waiting for the stock to really make a big run. That's at least my take on it. like the human psychology part about it. But also, with the hedge funds and the option flows, that's really bullish. That's really, really good right now. So I'm going to be watching it closely to see what happens with it. But as of right now, it looks really good. Do you know if Sens is also being shorted? Somebody else was talking about Sens too. I think they asked if it was a good long term or a good investment in general. 25.84% short. Cost to borrow max of 68.62%. Utilization 100%. Days to cover 11.41. Jeez, what is going on? Yeah, Sens is quite shorted actually. Down 6%. Yeah, it looks like you're almost at that level right here. I mean, the 175 to like $2 range. So you're kind of in that range right now. It could be a bottom area for it, but I mean, you're way off the 20-day simple moving average. How much? Oh my God, what happened to it? It dropped 33% on February 11th. That's insane. How much volume? 106 million for volume. That was a short frenzy. Or really bad news. Jeez. I met with a financial advisor last week. He said that Evergrande and BlackRock issue will cause a huge liquidity crisis and shorted stocks will squeeze. Yeah, I believe that. I mean, Evergrande, just Chinese real estate, the Chinese economy, they're cutting rates. So that's just alone to be cutting rates right now with even inflation that was 9% last year or 2021, last year, it is ridiculous. It's crazy. So they have big long-term systemic issues. Like China has been in a real estate bubble and a known real estate bubble for like 10 years now. And when that motherfucker pops, it takes a while. But there's going to be a lot of capital that kind of dries up. They had FDA approval, but then it tanked that day. If there was like a buy the rumor, sell the news kind of event, that would not surprise me. But if it was more like unexpected, like there was like that could still be like buy the rumor, sell the news. But a 33% drawdown, jeez, and then 6% today. It looks attractive in that sense to start a small position if you're in it, but yeah, oh man, it's hard to justify the valuation though. I'll tell you that right now. With $3 million in revenue, and I believe they were like a $1 billion company. Last time I checked, $2 billion or something. But diabetes is a big problem, so there's plenty of market share that they can take. Go ahead and take some of these lines off. Yeah, when I'm looking at the SPY, I like intraday, I like to pay attention to key levels. That's why I always have these lines up. Like today it was this one I really wanted to watch. Just a clear more so resistance level. Prior supports. I'll actually keep that one on. That's it. 446. So that'll be interesting. If we have a red day, that'll be interesting. Now, if Russia invades, until that CPI number really that comes out, on uh March 10th. That's going to be the next big catalyst for the markets. You do have Fed speakers. Where's it at? This is Friday. So Thursday, tomorrow, you do have ECB speakers in the morning. That could, move the markets a little bit. Not too crazy though. And then building permits for January, housing starts for January. Those are these red lines are like the bigger catalyst. Also the black when it's highlighted. Building permits month over month. I don't think that's going to really affect things too much, but you have initial jobless claims for last week. Jobless claims 4-week average. Continuing jobless claims. That's at 1:30 tomorrow. So that's going to be, I think that's going to be a decent catalyst. If that starts to, if that stays down, I would imagine the markets would take it pretty bad. Owns too much for the government to allow them to get deep in trouble. Yeah, I don't think BlackRock's going to be in trouble. They have so much capital and they're not exposed enough to Evergrande. Like BlackRock, when they have I believe they had $300 million of Evergrande bonds or something along those lines. Don't quote me on that exact number. But relative to BlackRock's portfolio, that is nothing. I mean, I think they have 10 trillion in assets or something crazy. Ridiculous. Oh, will you look at that? No MOAS again. Maybe in 2023. Subscribe here. Yeah. By the way, subscribe to the channel if you have not. But I think just kind of makes me laugh. I think you can't look at it like a YOLO weekly trade that I'm guilty of. I'm a degenerate gambling bastard that I put on before or other people. This is not that. You're not going to be able to pinpoint the exact day it starts, and you're probably not going to know that it's starting when it's shit. It could be starting now. At 13, we could already be in the pre-stages of the MOAS, right? So, point is, you can't really look at it on a day-to-day or even week-to-week basis. To say the MOAS didn't, it hasn't started again. You could have said that for a year straight. And, I mean, eventually one day it will start and you will be, you'll just miss it. But I don't think in 2023 like I said, even, I think the bottom of the market's probably summer to fall. So if that's the bottom of the markets and that's when the MOAS wants to happen, end of 2022, I'm fine with that. If you learn how to trade, you learn how to make money besides sitting and just holding shares, you'll be good. There's plenty of things to do out there in the markets, but you have to have knowledge behind it, and that's what some people don't like to learn. Even people in my real life that they've seen the trades where $15 will turn into 3,000, or the Facebook trade that we just hit 60 into 3,000 in a day. Snapchat the same week, the forward puts, all of those were 1,000% to the Facebook was a 4,000 or 5,000% gainer. Small amount turns to a large amount. People like that. That's cool, right? But nobody wants to learn the knowledge. So there's a lot to do out there. There's also a lot to learn. So if you're fed up with it, subscribe to the channel. We'll keep you up to date and all that. But if you're fed up with waiting every single day, you wake up and you're hoping the stock is at 100, then respectively, you should find something else better to do, because to wait on it on a day-to-day basis is not the way to go about it. You'll drive yourself crazy. And that's just it's not financial advice. Don't be a gambling degenerate, but still, you shouldn't wait, for it every single day. Like, it will happen. All you need to know, or all your conviction should be, is, hey, I know it's going to happen. I don't know when it's going to happen, but I know the facts here, and I know it's eventually going to happen. Just subscribed. Hello again from Ozark, Missouri, where we buy dips and blue chips. Let's get paid. I like that. We buy dips and blue chips. There we go. It's 12:38, end of the week. I dare you to buy a $13 put. I challenge you to load up your portfolio with $13 puts. Not financial advice, but I dare you, because you'll make money if that's the case. $70 a con. You might double your portfolio if you're right. Yeah, the Big Short too. I mean, they knew about that for 2 or 3 years. I believe like 2.5 years. And they had so much conviction, they bet the whole portfolio on it. The whole thing. They almost ran out of money. They were getting close. And then finally, that's the way that I like to look at it. Is I know what's there. And even now it looks a lot better. I mean, Evergreens needs a hug, yeah. Evergreens, Evergrande? Are you Evergrande? Is China spying on TCI and the traders in here? Evergreens, let me find out you're Evergrande. It's Evergrande. I think the market is closed Monday. I don't think so. I haven't heard that. GG said 90% of the orders are off exchange, but it's daily volume numbers that we see. They're supposed to be accurate. They're supposed to report the volume every like 15 seconds. That's what the law says, but again, you never really know. But it is closed. Oh, okay. President Day. Interesting. I did not hear about that yet. And I didn't pay attention. I just assume the market's open. If it's not, it's like, okay. But short week. Jeez. That's going to make everything weird if you're playing weeklies options. Tyler, how did you get started, and do you have any recommendations, videos, resource for someone wanting to learn? As far as options, which I'm assuming you mean Joe Biden Day. Young Biden and young Pow Pow. It has begun. Ukraine is... Bro, if it has begun, I will buy... Oh, man, don't start. Don't start. Not the same stream that I said it's all bullshit. If the futures are not down like 1%, where are you getting your source? Stop. Stop playing. No way. Ukraine news? Yeah, they are dumping a little bit. Are you sure? Like, positive here? Actually, hold on. This is a pretty good source for some information. Hold on real quick. When they're detained, they deny the base. I don't see no mortars, man. Where are you guys hearing that? Everyone trying to withdraw money from Canadian banks right now. I want some juicy news. Where do you hear that? Not Annan. Get your puts ready. But making 28 videos before 218 saying MOAS. Or man, evergreens. I feel like you went from cool to now you're mad. Why are you mad? It's okay. We can talk about it. Trust me. It's all good. Yeah, the futures are going down. Does anybody have a source for that news? Unusual whales. That's the source. But Ukraine again has been in a civil war for a long time. Like 8 years now, so it could also be one of those things to give Russia the green light to attack, but Ukraine's military forces have fired mortar shells and grenades at 4 LPR locations as per Sputnik. Link Sputnik News. Ukrainian armed forces fire mortar shells and grenades on 4 LPR localities. Armed forces fire mortar shells at 2:30 a.m. on Thursday. So that like just happened, didn't it? The attack came amid tense relations between Russia and NATO, whose members have been claiming that Moscow's alleged military buildup near Ukraine's borders would lead to an invasion. Moscow has repeatedly. That's it? Says urgent. Urgent! Get to the bunkers! Run! Get to the bunkers! Run! Russia! Yeah. I mean, Russia is not the powerhouse, though, that people think they are still. They're just trolling. I mean, the futures are taking a hit. Look at that. They have just dropped about 0.3% in the last 5 minutes. What's oil? See, oil's still down, so that's going to be the key. And you did see a tweet from, I believe, Saudi Arabia's president about the deal, I believe, with Iran or something to get more oil out. So, can war in Ukraine cause MOAS? No, it'll probably be a short-lived downturn. But yeah, NASDAQ futures are tanking. Yeah, it's tanking right now. Look at that. Down 0.5% now. Down 0.40%. Dow down 0.3%. That's kind of wild, actually. LPR, that's Russian. Is that Russian forces? Right? I'm not tripping, right? We're going like super basic here, but lawful permanent residents, also known as green card holders or non-citizens who are lawfully authorized to. No, that ain't right. What the fuck? Is that like code for Russia? Call Tom Nash, seriously. Light precision rifle? What? Oil climbing back above 93. I hear him loud and clear. Crypto getting hit too? Yeah, I'm sure, huh? What's the futures at? It looks, I mean, the markets are taking a hit on it, but not too much, as far as that. We'll go ahead and retweet that. Go ahead and follow me on, Twitter if you have not already. But what is LPR? LPR locations. What the fuck does that stand for? Bond yields dropping fast. Oh, yeah. Oil's coming up quick. Quick. Look at that. It was just down over 2%. That's the trade, I think. If something happens, it's probably oil. But, yeah, they are dropping fast, too. That means people are flooding into them. The war has literally no effect on North America, yet markets tank based on news. Well, it does, because it could drag us into a conflict, for one, and then oil is also traded on the global exchanges. So even though we get like I believe it's 3% of oil from that region, from Russia and Ukraine, all that, it still makes a difference on the global stage, especially this time of the year. Let's go save Ukraine and get no, let's not save Ukraine. Oh my God, are you want World War III? Yeah, wow, that's a very interesting. I want to see if these guys are talking about it at all.
Pepper's one of our sources.
What does LPR stand for? I'm still in military. Lawful permanent resident. The fuck? So probably one of those false flag type things. Market makers release one news article and sway the stock 20% in a split second. We stand no chance. I mean, true, but not true. We do stand a chance. But yeah, futures are taking a hit. Nothing as far as on CNBC yet. Oh, yeah. Everything's coming down a little bit, huh? NASDAQ down 0.66%. I still think it's bullshit even after this. Until we see tanks rolling across borders, I still think it's a bullshit, to be honest. Oh, shit. False flag is... Huh. Stand for LPR, just People's Republic. Is that the militants? Recognized to be part of Ukraine. The Ukrainian government asserts the Russian People's Republic is a terrorist organization, that it wages a war against Ukraine. The territory's largest city serves as the capital. The population of the republic is approximately 1.5 million people. In its constitution, LPR is proclaimed to be the democratic constitutional state. The head of state is this guy. So this is like the militant Russia-backed group. Right. Yeah. That wants to be a part of Russia, basically. Interesting. Well, oh, geez. Yeah, look at that, baby. Oh, my God. This may be bigger than you think, bro. It looks pretty bad. I mean, from the reaction we're seeing from futures, but most importantly, oil. That's going to be the thing that is really telltaling to me is what does oil do? Because that's the clear and easy pick out of all of this. Like, it's hard to tell what our exchanges would do over the course of the next couple of days or weeks, but oil, that's a fact, would go up substantially. That mountain area that was taken over the most starts tomorrow. Do your thing, Putin. Do your thing. Oh yeah, oil's chilling out a little bit. Yeah, that's the treasuries came back up a little bit, but yeah, Nasdaq, everything is pretty clapped. That's interesting. The Ukrainian armed forces fired mortar shells and grenades at 4 localities in the self-proclaimed Luhansk People's Republic. Oh, okay. At 2:30 a.m. on Thursday, according to the Joint Center for Control and Coordination. The attack came amid tense relations between Russia and NATO, whose members have been claiming that Moscow alleged military buildup near Ukraine's borders would lead to an invasion. Moscow has repeatedly... Ukraine has been dragged out of negotiations to resolve the conflict. Yeah, I mean, that definitely doesn't sound good. I get calls in UN chief. Yeah, I still have those USO calls too. Yeah, that's definitely hitting all the wires for sure. I'm surprised there's no article on it, though. Wow. They're definitely reacting to it, though. CNN's usually pretty fast. America detained in Russia says he's coughing up blood. That's not good. Yeah, nothing. Wait till it hits the major news headlines. Wait until it hits CNN or CNBC. Is there actually any other headline major news outlets that it's hit yet? Because that is just the move coming across the wire. Wow. Way to throw a wrench in things. Jeez. That's crazy. Going to be rich and in bunkers. Didn't our government state earlier this week that Russia was going to do a false flag? Wasn't this anything to do with this? Oh, 100%. It would be something like this. Saying, hey, they fired at these people and they killed our troops, right? Something like that. But surprising, Ukraine is the one firing. I mean, they've been at war with the separatists in that area for a long time now, 8 years. So it's nothing new to see this, but the world is paying attention, so it's being reported, and that might just be one of those false flag situations. Yeah, oil is only down 0.6%. Nasdaq down almost 1%, S&P down 0.68%, and the Dow down almost 0.5%. Whereas oil keeps coming up, it's only down 0.5%. Now that is very, very interesting. Even as the Nasdaq is going down a little bit, oil keeps going up. So that's really what I want to watch, because if oil which oil has took a little bit of a breather. You guys remember when oil went negative? That's crazy. If Russia did actually invade, then I would expect oil to go back to crazy levels. $105 a barrel. Yeah, it would definitely not surprise me to see oil go to 105 to 110 a barrel, if not higher. Hunter's homeboys. Is Russia attacking Ukraine again? They're not attacking Ukraine as of right now. I mean, you'll definitely see a reaction if that happens, but And see, the thing about oil too is that oil was already set up to do very well, regardless of this whole Ukraine-Russia situation. It was already set up to do well, with opening up, demand coming in full throttle. You add this on top of it and cutting off a lot of supply, and that's what makes it all that much more interesting. But yeah, NASDAQ down almost 1%. I'm surprised it has not hit the major news. It really is just the algorithm selling it off. Because, I mean, at this point, they're going to have the algorithms programmed for any kind of attack in general to sell stocks off. Right? So, that's a given. I bet Fox News got it. I hardly ever look at Fox News, though. Yeah, nothing. That's the real thing. Does it hit news outlets? That's what I want to watch and see real quick. And let me know if there's any other major news outlets that it is hitting. They're what? CNN, Fox News, CNBC. What are some other big ones that it might hit? It's kind of relaxing a little bit, but geez, that was a big move down. And that was all the algorithms. That's all that was. Man. Very interesting. Mm. 10-year coming is down a little bit. Still, what was it just at? Yeah, 2.04. That's at 1.98. That's a kind of big drawback. Pretty quick. People, algorithms just flooded into bonds. That's something to watch. But it is relaxing just a little bit. Man, I hope these butterflies hit. Oh, that would be solid. Just let the butterflies hit. That's it. That's all I ask for. No rush has 2,000 snipers with 50 cows 1 mile away. It's over, bruh. What do you mean? It's about to hit the major news. Yeah, when it does, that's when I would expect to see the futures actually get clapped. Like, if Russia invades, would not surprise me to see like a 2 to 3% down day. Here's false flag is here, and you guys are running with it because it's finally the mainstream media. No, I've known about this for, I mean, since Crimea, they've been in a civil war. 1 per 2 mile is over. I mean, it's unusual whales put this out at 11 p.m. 22 minutes ago. Ukraine's military forces have fired mortar shells and grenades at 4 LPR locations, as per Sputnik. And if you click on the link, that's this, and it's basically coming across like the terminals, the news wires, and it's causing an algorithmic move. It really hasn't hit the main news outlets yet, which, I mean, they're kind of slow to respond to things at night anyways, so it doesn't surprise me. But it might just be the algorithms getting triggered. It wouldn't surprise me though if, I mean, Russia did invade tonight, if they killed Breaking 911's just reported it. It's about to circulate. I've never heard of that. What is that? I might sound like a dumbass, but what's Breaking 911? I don't see anything. I don't really know what I'm doing here, but just being so rich, you have stock algorithms that act immediately at any time of the day and night and instantly make you money. Ridiculous. I mean, you do have a point there, but you can get rich too. Not betting AMC is going to go to 12, but long-term investing, real estate, AMC, I think those are all good places to be. Blew up their own towers to make a reason to invade and spike oil, aka jeez. Are you wearing a tinfoil hat, bro? Because I feel you, but you know, I don't know. Yeah, I don't see anything. Leaving car buyers on the hook. And nothing crazy right now, though. Futures, yeah, they're still down a lot. Surprised it hasn't hit anything. War is a battle of assets, land, gold, stocks, whatever there is, the value of their currency. I mean, everything's pegged to the US dollar pretty much, so. Drought on potential war. When it comes to reality, the markets will usually fall more initially. Yeah. 100%. Historically, if we are not involved, it doesn't tend to be a huge deal, besides for a couple of days or whatnot. But if you're in margin debt and can't pay any taxes, can you file for bankruptcy? Or, I mean, I hope you're not, but I think you can. Is that why you're so angry? Is that why you're so angry? You're in margin debt? Is that it? Are we getting to the bottom of this? We have finally broken through, huh? We finally broke the ice here. What's a realistic price prediction for AMC of 90% of the reported short cover? It depends what kind of velocity they cover in, right? If they're all forced to cover at the same time, that goes without saying. People would just have to keep buying them higher than the next guy and the next guy, and it would keep going up. But tough one to answer because it all depends on the velocity. But high. AMC is a $35 stock. I can agree with that. Depends what your outlook is, but most certainly. Yeah, oil is actually coming down a little bit more than what the indexes are doing. Yeah, that's it. Well, I'm glad we're making progress here, okay? That's all I care about. You know, we've all been in a tricky situation. Yeah, you're so underrated. I love you. Well, I love you. And I hope you are doing well. Do we know what Russia is so upset about? Why would they need war to solve this problem? Exactly. That's why I think it's I mean, I don't want to sit here and say anymore that I'm like I think it's bullshit what's going on. I don't think an invasion's going to happen, but because I could obviously be wrong in the next 5 minutes at this pace we're seeing tonight, but that's the thing. There it doesn't look like there is enough risk to reward to make it even make sense. I mean, Ukraine's not a pushover. They would have over 500,000 troops. I mean, they have the capability to put up a good fight. They obviously wouldn't win, but they could do a lot of damage. Main source of income is oil. He needs this panic. True. Yeah, you could probably see some kind of some benefit from doing that. But Ukraine just fired on Russia like 20 minutes ago. Well, the headline that we were seeing was this. Oh, now it changed. Oh, look at that. It says being updated. Okay, let's refresh it. It says now, in violation of ceasefire, Ukrainian armed forces fire mortar shells, grenades on 4 LPR localities. A little bit different. Ukraine's armed units grossly violated the ceasefire regime using weapons that, in accordance with the Minsk agreements, should be withdrawn. An officer of the LPR mission to the JSCC noted. The Minsk Accords agreed upon in February 2015 provided for a ceasefire between the self-proclaimed republics of Donetsk, and I can't even say these, so I'm not going to try to, and Kyiv. The withdrawal of military personnel, resumption of economic ties, and constitutional reform in Ukraine that would secure the republic's national rights. Russian President Vladimir Putin earlier stressed that the Minsk agreements on the conflict in eastern Ukraine represent the only possible solution to the issue, but Kyiv does not want to fulfill them, according to Putin. Ukraine has been dragging out negotiations to solve the conflict, and against this backdrop, NATO has been deploying military equipment along with the border with Russia. So it looks like they're updating this. So, Ukraine, what are you doing? Oh, what are they doing? Yeah, it looks like they did, but not on Russia. Like if they, I mean that's also the false flag argument. So who really knows what's going on over there? But yeah, it looks like they fired on these people, like it's like a breakaway region of Ukraine. So that'll be interesting to see how that. Oh, they're adding more pictures. Look at that. Instead of urgent, now you get this pretty picture. Okay. That was late, too. It's nighttime over there. It says 2:30 in the morning. So that is very interesting. I don't know. Well, I'm going to get off here. Thank you guys for the mods. Thank you guys for coming on and doing your part. Hopefully not shorting the like button at the same time. You know, don't short the like button. Short Russia. Don't short the like button. So thank you guys. If you guys want to join the trading community, check out the link down below in the pinned comment and the links in the description to get yourself some free stock. Thank you guys yet again, and you guys have a great night.